In our 11th class accountancy videos, today we are going to take the chapter 4 basis of accounting. Now there are two bases of accounting, cash basis and accrual basis of accounting. So we will be discussing those two today. Now see why these two bases of accounting are followed. Okay, one of the main purpose of accounting is to calculate the profit or loss of the business and the financial position of the business during a particular day. Profit and loss is calculated for a particular duration period, while the financial position is checked on a particular date. Okay, so to do that, two bases are followed. First is cash basis of accounting and another is accrual or mercantile basis of accounting. First we will discuss the cash basis of accounting. From the name itself we can guess that the transactions which are done in cash are recorded. Okay. In this basis of accounting, transactions are recorded when cash is received or cash is paid. In other words, credit transactions are not recorded. They are ignored until the cash is paid or cash is received. I am again repeating, listen to this very carefully. Under the cash basis of accounting, only the cash transactions are recorded. The transactions, if entered into and the cash is not received or cash is not paid, we will not record it in the books of accounts. That means the credit transactions, we will not record it until we have paid the cash or we have received the cash. Okay, so credit transactions are not recorded under the cash basis of accounting. Now see the cash basis, because we are recording only when the cash is paid or received, and many of the credit transactions are not recorded, estimates are not done, depreciation is not recorded. For all these reasons, the cash basis of accounting is very simple. Okay, only the transaction is recorded when cash is received and cash is paid. No other adjustments are done for prepaid expenses, outstanding expense, income received in advance. Okay, so the personal judgments all are not there. So it's very simple, and because of that, the cash basis of accounting is not able to present a true and fair financial statements. They are not able to calculate the true and fair profit or loss, and they are not able to present the true financial position of business on a particular day. And since it is recording only on the cash basis, it is not able to follow the matching concept of accounting. We have discussed in the previous chapter that all the expenses are matched and recorded in the same year in which the revenue is recognized. But here in cash basis, the matching principle cannot be followed, and because of that also the correct profit and loss is not able to be calculated. Okay, so the Companies Act does not recognize the cash basis of accounting. Now see, Company Act is a very important act. It governs all the companies registered under this act. Okay, so the Companies Act doesn't recognize that, so the no company can record or follow the cash basis of accounting, and this itself decreases the importance of cash basis of accounting. So many businesses are not following this system nowadays. Now the second one, accrual or mercantile basis of accounting. We have discussed the term accrual assumptions. Okay, and according to that principle assumption, transactions are recorded as and when we enter into the transaction. Okay, and not when the cash settlement is taking place. So here the accrual basis also on the same principle. According to the basis, this basis of accounting, a transaction is recorded in the books at the time it is entered into and not when the cash settlement is taking place. That means here we will record both cash as well as credit transactions. Okay, revenue is recognized when sale is complete. It is immaterial whether cash is received or not. Okay, we will record it as soon as the ownership of the goods is transferred. Expenses are regarded as incurred when the goods or services are acquired, okay, or availed, and the obligation to pay the amount is there. This system discloses the true and fair profit and loss and also the financial position. This takes into, and because it records the transaction as and when it happens, we make all the adjustments regarding the prepaid expenses, outstanding expense, accrued income, and income received in advance. And because all these adjustments are done, the financial statements present a more appropriate or fair view on the profit and loss earned by the business, and it presents the more true financial position of business.